Irani is scratching his head literally saying that what is this conversation? How can you run a portfolio when you underweight on banks? We own HDFC Bank, we own Kotak Mahindra Bank, we bought SBI. Am I right, sir?
Yes, you're right. In fact, financial is one sector you can't avoid in this market, Nikunj. By the way, the laddus are on the way. Forget the chart. The laddus are on the way now.
We had this conversation 2 weeks ago. And 2 weeks, which courier service are you using? They have not reached me.
That you to
No,
report right
I said the
numbers.
next time I'm on your show, I'm gonna give you a chart, but this time I've substituted laddus.
No, I'm saying 2 weeks ago you were supposed to come. So which courier service are going? It takes me 45 minutes to come to your office. I can come in the evening.
Okay.
Okay. What should one do now? I mean, now that global markets have made a convincing comeback, rupee strength I think is obvious. The more and more stability emerges at global level, the more and more India appeal in a sense will change in our favor.
So, Nikunj, I mean, that is what, by the way, thank you for having me on your show. So that is what our conclusion has been always, that India, to outperform, needs the global markets to stabilize. I think that's what's happened. And frankly, I mean, if you have a market of this size, I'm talking about the GDP that we're talking about in India, we're the fifth largest today and probably will be the third largest by the end of this decade, just before the end of this decade. In fact, the fact is that you cannot ignore this kind of a huge market growing at this pace. In fact, our call is that the GDP, Indian GDP, will be the fastest growing in the globe of a market of size. I mean, of the GDP of size that we have, will be probably the fastest growing going forward for the next 4 or 5 years. So that market cannot be ignored by global investors. And I think India has secured its place in history going forward. Secondly, look at the domestic flows itself. I mean, today I was reading that the SIPs are at $1.6 billion a month. And if you look at the other sticky flows, which is NFOs, NPS, EPFOs, and so on and so forth, ULIPs, etc., you're talking about a 3 billion flow every month coming into the markets and equities, which is undeniably a huge amount. So that way the absorption can be pretty good. In fact, I remember in one of your shows, in fact, the Chart Pe Charcha show, you'd asked me that if we were to compare the rally in our stock markets as a train journey between Churchgate and Borivali, where are we today? And I said Marine Lines, but I stand corrected. I think the train has just left the station.
Dinshaw, so one has to really enjoy the joyride with the paid ticket, which is the fee to a fund manager like you. What is the best way to now maximize? Should one have a minimum 3 to 5 year time frame? And do you think equities from these levels, which is markets at an all-time high, can they still give a 10 to 12% return in next 3 years? Because then sure, now a Shriram Transport senior citizen FD is giving 9% return. So what is the attractiveness for somebody to come to equities if the projected returns are 12-13%?
So, okay, Nikunj, I mean, if you were to work backwards, so the GDP growth that we're projecting, normally markets are slaves to growth, okay? It could be earnings and GDP. And the index is normally a play on GDP growth because that's what your earnings growth are going to be, because index is a representation of the GDP. And frankly, I mean, the stocks that represent the index are invariably better than what overall India Inc. is looking at, right? So that's why if you're talking about a 6.5% real GDP growth, you're talking about a nominal of roughly around 10.5%. You add another 2-3% of extra growth that these stocks, 15% is what we believe will be a standard growth going forward. But frankly, I mean, if you talk about the next 2 quarters, as you rightly pointed out, markets already hit a new high. I don't think it's a high which is going to remain for a while. I think again we'll be crossing that high going forward. But the fact is that the next couple of quarters are going to be trying, and that's when we believe that it's a stock pickers market which will play out over the next couple of quarters. And the base case here is that US will start looking up again from June onwards. and that frankly ties in along with the fact that our elections are also around the corner in April, May of next year, and 9 months earlier the normally election rally starts. So I think this couple of quarters are the ones which are going to give you an opportunity to get in, and that's what we tell our investors, that don't come in on a lump sum basis, stagger your investment out over a STP or a SIP, if you will, and that's how we play this out.
Dinshaw, I'm wondering, with the markets now almost closing in on a record high, are you tempted to add positions or maybe cut back on some positions somewhere? You know, stocks where you may feel are overly and richly priced.
No, Aisha, so we keep doing that. Evaluating our portfolio on a regular basis. We don't wait for the market to hit a new high before we take a call on the stock. We keep doing that on a regular basis. We may have sold some stocks which were probably at the bottom of the market, if at all. I mean, so that doesn't work with us. We take a very studied bet on a longer term basis, and that's why these movements do not perturb us to that extent. In fact, when the markets are down, also we look at opportunities to buy. So it comes with the conviction, and that conviction basically comes with the fact that you're looking at a growth. I mean, normally we identify stocks which have got a long runway of growth in front of them, 5-6 years kind of a runway of growth, and that's what we do. But frankly, for us, a long term is not that we buy and forget. What we do is we evaluate every short term, and that's how these short terms add up to a long term. So it's a constant evaluation process that we undertake, and that's how, if we convince on the stock, it remains with us.
Good morning, Nantar also joining in on the conversation. Love to ask you about one of the stocks you have a position in, Piramal Enterprises. You know, okay, the stock is entered the green today. Year to date, not a good performance at all. Year to date is down over 60%. Having said that, in the earnings, the one-time write-off, we've seen the stock also being punished. What did you make of it, and what will you continue to hold this position?
Well, that has been a disappointment, frankly. I mean, we weren't expecting this one-off which came about in a huge amount. I mean, we're not talking about a small amount here. So that really has, I mean, we going back to the drawing board on this one, and we just checking out our convictions on this. Obviously, when we will be looking at it, we evaluating that stock. But frankly, I mean, these are the opportunities. If you get convinced on those, these are the opportunities that you get, and we're waiting for further contact with the management to understand what's really happened, where they went wrong. Though the conference call was there, which was quite okay, but we need further clarity on this topic.
Good to have you. Thank you for joining us. I am waiting for the laddus. Hopefully next time when you're there, I shall give you feedback. Fingers crossed. Actually, let me do left and right both.
Take care. Thanks, Nikhil.
All right.